Hey everyone. Welcome back to the channel. Are you wondering if you can invest with just a little money? The answer is yes. You don't need to be a millionaire to start building wealth. Today I'll share 10 practical tips to help you begin investing, even with a tight budget. These steps will show you how small amounts can grow into something big over time. Let's get started. 1. Start with what you have. You don't need thousands of dollars to invest. Begin with as little as $10 or $20. Many platforms allow micro-investing, meaning you can buy fractions of stocks or funds. It's not about the amount, it's about starting point. 2. Use micro-investing apps. Platforms like Acorns, Stash, and Robinhood make it easy to invest small amounts. Some apps round up your everyday purchases to the nearest dollar and invest the spare change. It's an effortless way to dip your toes into investing. Point 3. Focus on low-cost index funds. Index funds and ETFs are perfect for beginners with limited budgets. These funds pool money from many investors to buy a diverse portfolio of stocks or bonds, reducing risk. Plus, they have low fees and steady returns over time. Point 4. Automate your investments. Set up automatic transfers to your investment account. Even if it's just $20 a month, automation ensures you're consistently investing without even thinking about it. 5. Take advantage of employer matching. If your job offers a 401k plan with matching contributions, take full advantage of it. It's like free money added to your retirement savings. Start with whatever percentage you can afford and increase it over time. 6. Explore real estate crowdfunding. Did you know you can invest in real estate with as little as $100? Platforms like Fundrise allow you to buy shares of properties, earning passive income through rent and appreciation. 7. Reinvest your earnings. If your investments generate dividends or interest, reinvest them instead of cashing out. This accelerates your portfolio's growth through the power of compounding. Point 8. Learn about robo-advisors. Robo-advisors like Betterment or Wealthfront help beginners by automatically creating and managing diversified portfolios. You don't need a lot of money and they handle all the heavy lifting for you. 9. Avoid high fees. High fees can eat into your profits. Stick to investments with low expense ratios and avoid accounts that charge high maintenance fees. Always check the costs before you commit. Point 10. Stay consistent and be patient. Investing isn't a get-rich-quick scheme. The most successful investors are those who stay consistent, invest regularly, and let time do its work. Remember, small amounts invested over a long period can lead to significant wealth. You don't need to wait for a big paycheck to start investing. The key is to take that first step and stay consistent. Start small, and let your money grow over time. If you found these tips helpful, give this video a thumbs up, share it with someone who's hesitant to start investing. And don't forget to subscribe for more financial tips. Question for the audience. What's the first investment you'd make with $20? Let me know in the comments. See you in the next video. Happy investing.